Hello and welcome to the CNBC TV18 Forbes pre-budget poll powered by BMR. I'm Shireen Bhan. Every year we commission a poll to gauge the mood of the corporates to find out what they expect from the budget and what could perhaps be the game-changing ideas that they would like to see in the budget. To discuss the findings of this year's poll, joining me now are the partners from BMR. Mukesh, let me start by asking you, how different was the mood this time around? Take us through the methodology. How many companies were surveyed? What's the sense that you get at the end of this?
We covered roughly around 55 CEOs and CFOs across a range of businesses from real estate, energy, infrastructure, automobile, and we also had a good mix of multinationals and large Indian business houses as well.
Is there a divergence between domestic investors and foreign investors? Because that's the sense we get. The foreign investors seem to be a little more enthusiastic about India than the domestic investors.
I don't know if there was any discernible trend that was evident, that foreign investors thought differently. But yes, the issues were certainly different for large Indian houses than for multinationals. To your earlier question, how different it was from last year, I think the mood was that of less optimism than what it was last year. And I don't think anyone really said that we are running out of time, but certainly the real mood was, are we running against time? And I think that came out very clearly in this year's
we're calling it the now or never budget on CNBC TV18, and that's the sense that you get as well, Mukesh?
Clearly, yes, because I think everyone is anticipating that this would be landmark, maybe not from a large economic reform standpoint, but some of the important structural reforms announcements. Nobody's expecting anything magical to happen in a year's time, but certainly an agenda is set out for this government as to how it is going to reform in the next 2 to 3 years of its tenure.
Okay, Gokul, let's start with the first question, and we'd ask people to tell us about what the realistic growth rate is likely to be. And a majority, 94%, believe that it's going to be between 7 and 8%. Barely 4% believe that it's going to be more than 8%. So those days of 8% plus kind of growth number, that's not the expectation any longer.
That's not the expectation because we haven't seen the GST coming through, and that's been another outcome of the survey where they're saying this parliamentary logjam on GST has not been a good thing. There was expectation that that would also propel growth, but the absence of a consensus for a GST has an impact on how
GST is one aspect, Gokul. Even if we were to look at corporate earnings, for instance, we haven't seen any sharp pickup or a pickup at all as far as corporate earnings are concerned. If we were to look at credit offtake, we haven't seen a pickup even as far as credit offtake is concerned. So yes, GST not going through is an issue, is a concern, but there seem to be a lot of other concerns that are weighing on sentiment as well.
There is, and I think there were, as you correctly started, there were three sort of messages which are coming out consistently from the CEOs, domestic and international. First is, of course, a race against time in some sense, because they're seeing that this is a budget that sets you into the midterm of the government.
Sorry.
What they're also seeing is that a number of issues which include tax, which are broadly within the realm of ease of doing business, they continue to trouble the boardroom.
Okay.
That's the second thing. And the third thing which they're saying is that, look, a lot of macroeconomic situation is one which does enable the government to have the leeway to carry out reforms which are very essential. So it's, in that sense, a now or never situation.
Okay. So let me bring you in because, you've, of course, been part of, Forbes has been part of this poll as well, along with us. And you've also put out a cover story on whether Mr. Jaitley can deliver on Mr. Modi's promise. What's the sense that you get about Budget 2016?
Well, it's pretty much what CNBC TV18 is also saying, in the sense that it is now or never. I think the sense in the boardrooms are that very much on the same lines, in the sense that this is the best opportunity the government has to actually put out some kind of a statement of intent. It's not that whether it's a big bang reform or something on those lines, but I think there is a serious need for a certain statement of intent to show that, the logjam apart, there are things which are being done and the government needs to move forward. So I would estimate, again, realistically, like the poll suggests, anywhere between 7 and 8% as the growth rate which people are betting on, nothing on the higher side beyond that. So I think the sense is it's now or never.
It is now or never. Okay, we just discussed GST and Gokul brought that up. So let me move to the other question, Mukesh, and get you in on that. You asked that rank in order of priority, how GST will impact your business. Simplified tax regime, 73%, that's the majority, believe that it will bring in a simplified tax regime. It will reduce compliance costs, improve the supply chain, and reduce production costs as well. So clearly the benefits of GST are understood. I mean, this is a constituency that wants GST tomorrow. The question now is, can the government deliver on that promise?
We all know the reasons why GST is being delayed, and I think that there are a lot of opportunities for the government to deliver on most of the factors that you listed out, despite not having a constitutional amendment. And I anticipate that there are several niggling issues insofar as seamless credits on central the indirect tax levies are concerned. There are still issues with respect to inverted duty structures on many of the products. And I think these are some of the opportunities that are available to the
irrespective of whether the GST comes through or not. These are areas that require course correction.
I think Mr. Jaitley has an opportunity to deliver a seamless central GST in this year's budget, and I anticipate that that would be very high on his agenda.
Okay, so give me specifics in terms of what you would expect or like to see.
Well, seamless credit of all central levies, addressing inverted duty structure for certain industries.
Some of it was corrected last year. So yes, any specific areas where you believe that it continues to be a big anomaly?
I think this has a direct connection with the Make in India initiative of the government. So I think India has opportunities for propelling manufacturing in the IT, industry, in many of the telecom products that we are importing, because the current tariffs to which since India is a signatory to ITA2, the tariff structure makes it far more better for Indian telecom operators to import the equipment. So I think those are the two opportunities. I also see that people should not really be disappointed if the rate of service tax goes up, because those rates have to be aligned with the revenue neutral rate.
15% you believe is going to be the case?
That's right.
Okay. Gokul, let me ask you about the other question that we asked. Rank in order of priority on what to address to improve the ease of doing business. And again, majority, that's 39%. Actually, it's neck and neck between the non-adversarial tax regime and curtailing red tapeism, skilled labor and simplified labor laws about 31%, and of course the introduction of GST at 33%. But on the promise of providing a non-adversarial tax regime, do you believe that this government has been able to deliver on that promise?
I think the government's made some very, very progressive steps during the course of the year, which were outside of the legislative process. One key one was how to bring down some of the litigation by increasing the thresholds at which the government will go out and litigate. And, there are talks that maybe 30 to 40% of the litigations in the courts could actually drop away. And that's a very material difference which is there. The government is also trying to bring out a new framework in how tax policy will be constructed in India. And I think they have picked up pieces from the Shom committee which is there. I think as we are moving toward a very milestone development of a GAR coming in next year, this is a time that the recommendations of the Ishwar Committee on Simplification and the TARC committee by Dr. Shom, both of these recommendations should be put in all earnest into the legislative framework.
Okay, so that's what you expect the budget to take forward, and a lot of those recommendations have already been presented to the Finance Ministry, so the budget team does have all of that material to work with. But sort of let me ask you, when you were putting that cover story together on what the budget could perhaps mean for the economy, what were the big challenges or the bugbears that people told you are yet to be addressed by the government despite the promises being made in the past?
I think a couple of things essentially stand out, Shireen. One is, while there has been an oil windfall in that sense for the government, but is that enough? Where will the money to really put into the economy and kickstart growth and the investment cycle itself come from? I think that, there are issues like the pay commission recommendations and OROP, which will eat into resources. So where will exactly the government bring in the money from? Disinvestments, unfortunately, haven't really taken off. So there are 5 or 6 key dilemmas which we've listed out in our cover story in this particular issue. But the essential point being, where will the resources come from? And you can't really bank on only the oil windfall. So,
Absolutely, and that brings us that brings us to the other question that we asked. We said, what would help the government reach the 3% deficit target by FY18? There is, of course, the question on whether we will meet the fiscal deficit target of 3.5% in FY17 or not. Will we slip? Will we be about 3.7 or 3.8? But a majority, 76%, believe the government needs to broaden the tax base. 67% believe cut food and fertilizer subsidy, which is going to be difficult given what's happening as far as the distress in the agri sector is concerned. Infrastructure via PPP, 51%. PSU disinvestment, 43%, as Saurav pointed out. We're going to fall short of the disinvestment receipts this time around as well. And austerity measures, 41%. What do you expect on this front,
I don't
Mukesh?
think there is anything magical about the 3% target. I think it's a quality of how you achieve the 3% target. I think the worrisome factor for economic policy makers has been the level at which the debt is rising.
Right.
So if you look at peer countries that deliver a fiscal deficit between 3 to 4%, their debt levels are around 40 to 45% of GDP. India stands at 67%. The second challenge that the government has is that corporate earnings are going to be muted. Tax collections are not going to be good. So the only way for Mr. Jaitley to be able to achieve some respectable degree of increase in tax collection is to increase the tax compliance.
Right.
And that's where the point goes in on the quality of administration and the non-adversarial point that Gokul talked about. I think nobody's questioning the intent of this government. Nobody's questioning all the steps that they have taken. There are two key questions. One is a disconnect that we see between what the people at the highest political level and the policy makers want and what's really the reality at the ground level. And last week's example on Vodafone is a case in point. I think the second aspect is that it good enough? So I think these are the two aspects that I think North Bloc needs to seriously reflect upon, that we need much more and that we need a serious connect between what happens at the ground level and what's the real reality. Because without that, and with muted corporate earnings, you're not going to achieve the tax collections to be able to meet the fiscal deficit
Since we're
target.
talking about tax, and I asked Gokul this question, I'll take a break in just a second, but very quickly, Mukesh, let me ask you, LTCG, that's the big worry at this point in time. In fact, guests that I've been speaking to saying, do join us on budget. They're like, no, we need to understand whether, we're going to see any changes on that front or not, because we have to decide what to do with our portfolio. So what's your expectation?
So I have read media reports. I think it's an extremely regressive step, simply because if you go back into the history of securities transaction tax, which was introduced in 2004, it was introduced because you wanted to levy tax at the transaction level, and that's the reason you were very liberal when it came to long-term capital gains tax. So I think, you can't levy a securities transaction tax and also make the limitation of 1 year extended to 3 years for long-term capital gains. But if you look at the trend of securities transaction tax, it's remained more or less between 5 to 7,000 crores. So perhaps the government is doing this from a revenue mobilization viewpoint, from the point of view of making sure that the investor stays invested for a longer time. But I doubt if this is going to send out positive signals.
No, it's not. That certainly is not going to be the case at this point in time, as we've seen the markets react to the possibility of that happening. But we are going to have to take a quick commercial break. We'll be right back with you as we discuss the findings of the CNBC TV18 Forbes pre-budget poll powered by BMR. Welcome back. You're watching the CNBC TV18 Forbes pre-budget poll powered by BMR. Let's continue with our findings. And Mukesh, the question that we asked is, how should the government deal with public sector companies? And a majority, 49%, believes that strategic disinvestment should be the way forward, and, the PSU status will be lost. And of course, the government has now clarified that when they talk about strategic divestment, they do mean giving up control. We are perhaps going to see the contours of the policy being unveiled in the budget. What would your expectation be? See,
I think that it's one thing to say that the government should garner resources by divestment proceeds. I think the government is going to be far more strategic in its approach. I anticipate coming back of a divestment commission in some shape and in some form. Which we've also been reporting on here on CNBC. So they will look at each and every PSU on a case-by-case basis. I don't anticipate government doing a significant dilution other than through the IPO public route, insofar as the large profitable ones are concerned. I also see the government not being hesitant in giving up control in some of the PSUs and actually doing away with the PSUs that they don't want to be into. I think the most important aspect is, what kind of the PSUs in which the government has either minority or majority control, how do they professionalize the management? I think that's not going to be an easy exercise. So this government started out by saying that we are going to review the board positions for all PSUs, get professionals in. I don't think a lot has been done in that area, but I see that some form of divestment commission will look into those aspects
but
as well.
Let's also assess what's happened on ground. I mean, they haven't even been able to get out of hotels, and this was the promise that the government made, of maximum governance and minimum government, and why should the government be in businesses that it should not, have any business to be in? Back and forth for almost a year now, and finally we're seeing RFPs being issued as far as hotel disinvestment is concerned. So how real do you really believe this business of strategic disinvestment is going to be?
So the government won't give up the flagship Ashoka hotel that you see in the capital, but I think that the government would be open to give up control in running hotels. It may keep up control of some of the sectors for strategic reasons, but I don't think that there is any design for the government to keep control on all the PSUs.
Okay. Gokul?
So I think some way the divestment issue did not get the priority that it needed to get in the mind space of the finance ministry and the finance minister specifically. So I think all of the three things that we spoke about will probably start happening in this year.
Okay.
And they will sort of bundle PSUs into different baskets. I think the government with the administrative ministries will be very keen to have empowerment moving to some of the PSUs to become those super Ratnas, which is important. And of course, they will like to have certain PSUs being strategically divested upon.
Okay.
But I think this is one of the midterm policy things that they will work on.
For a year now, we've talked about this FDI cap, at least as far as public sector banks are concerned, going up. Gokul, do you believe that that's likely to happen given the state of the banking system today?
Can't say on that. I think that is one of the areas which we are not very sure whether the government will actually move forward. I think they may pause for a while on that one.
Okay.
I'm skeptical.
You're
I think
skeptical.
for political reasons, the government would like to maintain majority control on PSUs. I don't see PSU banks being
No, 52% is what they've already stated, that's as low as the government is likely to go. But the question was whether the FDI cap would be hiked beyond 24% to 49% in public sector banks.
Yeah, but you look at it also from an investor standpoint, given where we stand on NPAs or PSU banks.
Would it make sense to enter at these levels?
Yeah, and who are the investors who will actually express a serious interest?
Absolutely, you're right on that front. Saurav, let me ask you, the next question that we polled was, is the government's public spending fueling the economy? And strangely, I would have imagined that people would have felt that yes, it was, but 50% are not sure whether it is actually the government capex on infrastructure, railways, highways, etc., that is pumping the economy or driving the economy at this point in time. What do you make of it?
Well, Shireen, actually you're right, but if you see the basic figures which are available, there has been increase in outlays for the road sector, urban development, railways, all of which have actually increased in terms of the actual figures vis-a-vis year on year, at least till the latest figures are available. But I think the corporate sector is yet unsure, as the results show, because typically, this will take some time to play out. I think the results are not very visible yet. So I don't really worry on that count, because I think there has been a 70,000 crore allocation last year.
That's right.
And I think that is playing out, and a lot of the resources are being pumped into these areas. So I think that will play out. So I think it's not sure because it's not visible as yet. I think that's my reading.
Absolutely.
Coming to the disinvestment point, Shireen, I'd just like to make a small point here. I think I would like to see something, as we were talking to people, and some very interesting things were suggested. One of which being that the government invariably waits till the end of the year to look and figure out what they'd want to do with some of the disinvestment plans, and then the markets turn adverse, and then they're left waiting for the right time. I think what essentially needs to be done is probably an SIP kind of a thing, where there is a disinvestment probably through the year in some form or the other in small chunks. I think that will probably yield better revenues for them.
All right, Gokul?
So I think one of the things when, we spoke to some of the CEOs was when they said not sure, I think their skepticism was coming out of the quality of the expenditure, the quality of the spending.
Okay.
And, the government is spending, but it is spending right. And that's where the question was really coming in, which was making people a little wary of whether this is money that is going to really propel the economy.
But the majority of the allocation is towards the infrastructure sector. So you're saying that, what is the confusion on that front at this point in time?
Well, I think when they're talking about the quality of expenditure, I don't know whether they are seeing the right type of asset building happening, which is giving them the confidence that this money is really getting well spent.
Okay, all right. Let's move to the next question then, and this is related to the one that we were just discussing. Which sector should get a big thrust in the budget? And again, 78% believe infrastructure, so that's come out at number 1. Education, 75%. Transportation, 56%. Energy, 49%. You expect an increased allocation over last year to the infrastructure sector, Mukesh?
No doubt.
With a special emphasis perhaps on rural infrastructure?
No doubt about it. So I anticipate, to your point on rural infrastructure, irrigation getting more allocation. And again on infrastructure, I think that urban transportation would be a focus area for the government. So every budget you see announcements on metros and how many cities are covered. You look at the 4 industrial corridors that they're talking about, all of that will fall under urban infrastructure and urban transportation. So those are the sectors that will receive the maximum attention. Okay,
that's as far as the spending thrust is concerned. Next question, will the withdrawal of corporate tax exemptions hurt Make in India? Almost 70% Gokul believe that it will.
Well, and that's a little bit of a conflict with when the question was asked as, how do you look at the roadmap where the corporate tax rates are going to be dropped and the exemptions will go away? Most people were in favor of this policy change and they were rooting for it. When the question was, well, is this going to hurt the Make in India program? The answer was, yeah, it's going to probably hurt it.
So they want a little bit of both, right?
So I guess it's a balance between the two that needs to be coming out from the finance minister, and he's got a little bit of a tight walk here.
So do you believe that 1 to 1.5% will be the cut announced by the finance minister in the corporate tax rate?
Everyone was hoping so.
1 to 1.5%?
I think there would be more a 4-year phased program. I mean, he would be constrained from being aggressive in 16-17 budget. I don't know whether it will be 1 or 1.5%, but I think he will announce a roadmap for the next 4 years. Okay, and a link to that is, should the government introduce tax incentives to boost Make in India and Digital India? Unlikely, because they're trying to do away with exemptions and bring down the corporate tax rate. The only tax incentive would be the Startup India 3-year tax holiday, which was announced. Which is not really that meaningful, is it? Well, I think, if you're looking at the definition of Startup India enterprises that deliver turnover of less than 25 crores, I think it would make sense to them. Okay. And even if you today look at the scatter of who really benefits from the exemptions, is really the large corporates. But I think corporates, in my view, speaking to them, are prepared with a larger framework of doing away with exemptions and bringing down the corporate tax rates. The only thing that we have been advocating with the government is that announce a roadmap, and the roadmap that they've floated about a couple of months back is not something that's going to go down well. So let me give you one example of special economic zones. They are saying that special economic zones not notified and not operational by April 1, 2017 will not enjoy. Now let me tell you one thing, if somebody wants to make a special economic zone operational in 17-18, the planning starts in 13 and 14. So the question is, they feel a little shortchanged. So I think that whatever is the phased out exemption program, it should make sense, and it should be done exactly in the same manner as you're reducing the corporate tax rates. Absolutely, and it has to be a judicious balance as well, given the timing and given the state of the economy and given the state of corporate India and our quest to try and get domestic demand to perk up and get foreign investors to also continue to invest in India. Sar Majumdar, Gokul Chaudhri, Mukesh Butani, appreciate you joining us here on CNBC TV18, and let's see what the 29th will bring us in terms of announcements from the finance minister. We'll check in with all 3 of you and see how much of what we discussed here today will finally make it to the budget documents. But thank you very much for your time. On that note, it is time for us to wrap up this CNBC TV18 special. From all of us here, goodbye. Many thanks for watching.